Now.
Sounds good. Well, first of all, thank you everyone for joining. Greatly appreciated. So I'll just introduce myself first. Name's Michael Nauss. I'm a chartered market technician and a more of a kind of systematic and quantitative type trader. So I look at the market through statistics, and then I also look at it through regular chartered market technician stuff, looking at charts and the footprints that they come with, and telling us who's buying and who's selling and where they're buying it, where they're selling it, and that type of thing. And I'm here today with trade ideas to kind of show you guys some of the cool ways that we analyze data, as well as, of course, because that's what we're doing here, is take any chart requests or anything that you like to see. One of the ways I like to focus on the market is looking at relative strength and relative weakness. So that's one thing that you're going to see pretty prevalent here on my screen. Let me just grab my little drawing tool here. Just to highlight what these boxes are. So a lot of you have probably seen market heat maps before. The focus and what we do that's really cool here with them is these are real time, right? So you can see they're kind of wiggling around and moving as things go. Um, the so what this is showing me is basically ranking everything by the change from the close, and then this is changed from the close down. And these are just custom sectors that I look at. You can put whatever you want in here. You can have the system auto generate symbols for you to show you what's up the most, down the most on the day, that type of thing. But what I look at here is I want to just use this to get an overall theme of what I'm seeing in the market and what I think is going on. And then from there, I can start to dive in. So of course, anything green, and the darker green it is, and the bigger box it is, the more up, and then the bigger and darker box, the more down. So PSIL is the psychedelic sector, so that's leading the charge to the downside, and FDN is the internet security. You could also look at hack, but this is going to be things like CrowdStrike, which was obviously getting killed. That's doing the best. And sometimes, quite often, you can see themes, right? So I see USO, which is oil, and I see DBC, which is commodities, both tracking lower. I see, things like XNTK, which is technology ETF. I see XLC, which is communication. So Meta, all of that doing up. So I can just quickly look at this at any point throughout the day and just say, okay, commodities look like they're down, right? On the lower end, we see corn and carbon and wheat. All these things are down the most on the day. Copper is down, so it probably means that silver is probably down, and gold is probably also gold's actually holding on. Okay. And so I can just get a theme here. Seems like it's a risk on day. We're seeing a lot more movement in the cool stuff, right? Technology stuff has been beaten up a little bit, and then down moves with everything else, and gold just kind of turned negative. So that's just kind of how I take a look to start taking, so obviously I'm here to look at whatever charts you want. That's how I take an overall view of the market every day, just to say, okay, what kind of day are we in? Risk on day, risk off day. This looks like it's a risk on day. They're going hard after uh, things like IWV. This is the Russell 3000 ETF, which is a good overall view of the market. The Russell 3000 is, 3,000 of the all the stocks out there. I think it's like 97% of the investable universe exists right here. So everything seems to be doing well from the riskier side of things, right? FXI with China. And then again, commodities, silver, that type of thing are having more of a bad time. IBIT, IBIT. So that's crypto. Again, up a little bit on the day, not doing too much. So we have our first look here. We can do STRL, Sterling Infrastructures. So a couple of things that just to show you, I know everyone's chart's different, so I'm going to take a look and just show you guys a little bit, some of the things that to take a look at in the chart. First of all, we have a lot of the fundamental information right here. So you can take a look at things like what their market cap is, 3.2 billion on this one. Earnings per share is positive. So I'm a CMT. I'm not a CFA. So I do a quick, slow overview of what I think financially of a company and the basic stuff, right? Are they making money? You know, do they have cash on hand? Are they swimming in a bunch of debt? In this case, no, they got, $500,000 worth of cash and less than that worth of debt. So the cash to debt ratio is positive. That's a good look for me, and they're making money. Basically, I do that three-way check just to say, hey, is this company that's very, very strong? Is it going to issue a bunch of shares on me? Probably not. And anything could happen, but probably not because they have money. They're making money. They probably don't need to go and raise capital from other people. Couple other things again, market cap, I just want to know, is this a tiny company? Is it a massive company? That will sometimes curtail risk in one way or the other. If it's a tiny little guy, then I'm going to be a little bit more careful with how much I trade. If it's a massive company, then I'm going to be, again, just careful in the other way of how I trade. So, $3 billion company. It's not a tiny guy. It's not huge. It's kind of that's technically still a small cap, but not really by too much, right? Um, so then into above that, one thing I really like is the short float. So let's go over that for just a second here. And with short float, we have 5.17%. You can see we have up here, which is not crazy, but okay. But what really kind of gets me interested is that the days to cover. So days to cover is a metric that I absolutely love that um, combines the short float, so how many shares are out there and shorted, and it combines that with how many shares are normally traded. So, for example, if there was 1 million shares outstanding, let's say there's just 1 million shares out there in the market, and only 100,000 of those shares are loaned out. That'd be a short float of 10%, which is a modest short float. It's not crazy. It's not super low. It makes sense, right? It's a logical short float. However, if the stock only traded 10,000 shares a day, well, if something good happened in the company, and short sellers had to cover their shares by buying stocks, it would take them 10 full days to buy back those 100,000 shares that are left outstanding. So the higher days to cover number is a really good way to measure that if this thing gets going, will there be that kind of wind at the back when it comes to looking at, hey, there's a lot of people that need to cover, but there's generally not a lot of volume done in the stock. So it's good, assuming it's not a crazy low volume stock, but already done 53,000 shares today, which means not something that I'd be interested in day trading. That's not enough volume for an active day trading strategy, but for swing trading, longer term holds, anything in the 100,000 share-ish a day average volume will be fine. Looking at the volume down here, frequently does over 250,000 shares, often on important days does over 500,000 shares. It's plenty liquid. So just to show that's kind of my top-down approach when it comes to the fundamental side of things. I'm not going to be one that is looking at earnings per share and comparing it to its group and all this kind of stuff. But for me, is the company going to issue a bunch of shares on me? Because if so, that's obviously not good, right? So I need to kind of curtail that. And is this a company that is sound in some respects? And the short float is just kind of the icing on the cake. Don't need a short float, but I love when people are heavily shorted stocks, especially in uptrends. So that leads me to another thing around the chart that's a bit unique to something that we do at Trade Ideas, and it's this chart right here. So as I change symbols, let's go to just GDX for a second. You can see that changes, and then I go to STRL, that changes. So what this is doing is this is showing me a monthly chart, a 5-year history of the stock, and it's, this percentage number is how much this company is up in 5 years. So what this allows me to do is it allows me to focus on the shorter term kind of daily chart for entry and exit patterns and figure out, what I see here on the more intermediate term chart, while always keeping an eye on this longer term chart. And this one is pretty easy. This thing's just been, since it broke out here at $30 a share over these recent highs, this thing's just been an absolute ripper, which again, I very much like the idea behind, because right, it's something that is moving like this and is heavily shorted. I think that's a perfect combination between those two things. So now into the daily chart here, this yellow vertical line, if you see these on my charts, again, there's something built in with trade ideas, that's the earnings date. So it just shows me, hey, this is the most recent earnings date. Let's highlight it in yellow to just make sure that you know what was the earnings reaction. Not super great that it gapped down on earnings, but really good that it kind of came back. I think this was the same day, the 5th. This was the same day the whole market got killed. So could be completely unrelated to earnings that this thing fell as well. So obviously love the monthly chart. I am a relative strength guy. I'm a trend trader. I want to buy things that are going up. I want to stay out of things or short things that are going down in the long run. So that has that covered for me for sure. In the intermediate term, there's some things that just kind of instantly stand out. And I talked about how I'm statistically minded on the onset here. And a lot of that is because, we know things like trends persist over time, right? That's not a rocket science. It's the way it works. So you want to make sure things are uptrending. And then we know some things as well when it comes to volatility. So price doesn't mean revert as much as people would like to think it does. However, volatility does mean revert. So I just put on an indicator there called Bollinger Bandwidth, and this just shows how volatile the stock is currently in relation to how volatile the stock is normally, right? So it's on the low end, which is good, right? You don't want to buy a stock as it's doing this and volatility is spiking. You more want to buy the stock, in my opinion, when volatility is low, because it means you're probably building some sort of base that you can play against. Um, so again, we went through, is this a safe company for me to own? Is there some sort of motivated seller in it if it gets moving? What is the underlying trend? And all of those things look good to me. So now what I do is I try to construct a trading plan if I were to be interested in this. Is there anything that I see, and at what levels may I take some action? So, right, that just becomes a simple method of, let me mark some places that were important for the stock recently, and then let's see where we are relative to those things. Some basic support and resistance lines and trend lines. Again, these are, the very kind of basic tenets of technical analysis. I don't think these in and of themselves have any magic behind them, but it becomes uh, interesting to potentially build a trading plan around it. You need to have these indicators of where would I get involved, for what reason, you know, all of that. Because everything I see here says this is something that is in a strong uptrend. It's a fairly strong company. It's not something that I want to be shorting by any means. The question is, if I did want to get long, then where? And I'm looking primarily at this line right here. This is around $112 a share. Was support was resistance, this area. One of my favorite sayings from a technical analysis when I was taking my CMT. I heard a lot. A friend of mine, JC from All Star Charts, he would talk about, you draw your support resistance zones. You draw your line with a crayon. You don't draw them with a pencil, which means that when you put in a line, you just know that that's an area, that's a zone to take a look at. It's not, right here is where I need to focus. And so we're talking, 112 to maybe 115. This zone, I can just do another line here. This zone right here has been very interesting to this stock in the past, right? Where we have all these lows that happened in through here before earnings and before Japan messed up the market, and then we have a lot of these highs back here as well. This was probably another earnings date that happened that popped this up as well. So we have a big zone there. So the first thing I look at to say, would I be interested in the stock, would be, do I have to, I would have to retake that. I would have to be over 112 and preferably kind of over that 115. Um, I would want to see that retaken because right now we are trapped below that. So that's just step one. I need to be above that. Now, then where would I be out kind of a worst case scenario? Or if I was someone who bought support, generally not what I like to do, but there's nothing wrong with buying stocks at support if you got trading plans around them. That to me exists around this $95 a share zone. So if you're someone who is buying support, then 195 bucks for me, that's kind of that would be my out, right? If I think that this insane trend, nearly 1,000% gain, 10 bagger, 5 years, great trade. If I think this is going to persist and this is going to continue, the way I look at it is that we kind of need to be above that 115 area. Absolute worst case stop is going to be 95 bucks a share. Um, you could probably, if you want to be tighter on that stop, you could probably just put it under this most recent congestion and call it like 100 bucks. Nice psychological number to play around. But yeah, I need to see this area break just because it's such a strong zone going back for a long period of time. Uh, and the fact that we came up a couple days ago. We tried to break above it. We failed. Every time we've been up in this 110-ish area over the last handful of days, we failed. That just makes me think a break above, a close above. And just so you know how I look at things and how I trade is that I always want to see kind of a closing price, or at least for it to exist for the afternoon above this certain zone. Because I what I don't want to see is I don't want to see a one of those we've all been stuck in it. You have a price, you're like, I like this stock over 10 bucks, and it just pops through 10 bucks right off the open and then immediately slams back down and reverses on you. Right? You just don't, that's not fun by any stretch of the imagination. So yeah, just not what I want to have happen. So if we can get through that area, then I think this is a good look, and we can push from there. Also, you can within trade ideas, you can do a deeper dive on the fundamentals if you want. You can also take a look at the news. There's not a lot. There's something on the 12th. So SG Securities LLC, whatever this is, bought 26,000 shares of this company. So you might look at that SGLLC and see if they are, um, if there's someone who understands the infrastructure world or what is they do. And then down here we have a bunch of competition for the stock. So you could click through some of these to see if there's anything in the same sector that stands out to you. But good looking company. To summarize, for me, it's got to clear back over that 115, that 112 to 115 area, and then I think that's something that you could definitely take a shot in. Um, but yeah, if you're currently long and you're like, well, what do I do with it? Hopefully you got it somewhere in this wicked move, and you can just say, okay, if we break down, say 95 bucks or so, then it's probably time to move on with my life and go into something else. So PMD for an intraday trade. So right, we're going to do the same analysis, but because an intraday change, we're going to change it up. I already want to see, I don't really care as much that it's a profitable company. The cash versus debt is less interesting to me. Um, Psychomedics companies, hair, they do drug testing for hair samples. Oh, so they're narcs. So big gap up, some sort of news. Again, I can click through here and I can see the news right here. Again, this is just what we do in trade ideas. Uh, Company's board of directors approves plan to terminate registration of its common stock. That doesn't seem good. Again, I'm not a news guy, but that seems not ideal. But for a day trade, right, we're going to be a little bit different there. So big gap up. This number we have right here, this relative volume number. So this is something that what it does, it takes how much volume has been done in this stock today, and then how much is normally done in this stock at this time. So it is 11 Eastern-ish. So as of 11 Eastern on most days in this stock, we have 104 times, 114 times, sorry, normal volume. That is something that you definitely want to see when it comes to day trading. You want that increased relative volume. It shows you that there are market participants that are very much trading this thing very, very actively. Then I always take a look at the float. I'm less concerned with things like market cap, but I'm more concerned with the float. There's only 4 million shares outstanding in this company. It's a very, very tiny company. The whole company is only worth 13 million. If we all pooled our money together, we could own this narc company that's busting people for doing the drugs. So again, it's going to create volatility that creates both opportunity and danger. Just be careful with that uh, as well. Earnings tomorrow after market close. That's another thing to keep in mind on. Obviously, if you're planning on being out today, it doesn't matter too much. If you're planning on holding, you have to know that that's the case. Now, what I'm going to do is I'm going to change these two charts because I want to do a year-to-date line chart because we know what it is. This company's been absolutely killed for from $8 down to 2. So I'm going to do that for this year-to-date chart, down 31%, even after today's 27% move. And let's just pop into, say, a 10 minutes. Let's actually go over here. We're going to go over to this one. And we're going to take a look at, sorry, what was it? PMD. So these are some moving average clouds that we have built in here. They just kind of help me when I am doing day trading, just make sure I'm on the right side of any sort of underlying trend. So this thing seems to be pushing up. It's above this long-term line, which is great. I would say if you're interested in this one, just know it's not moving very much. Yes, it's gapped up, but it hasn't really moved much from there. Clear resistance at this kind of 235 area. Watch this upward trending. This is a 50-day moving average. This moving average from here as well. Uh, this So I would say your trade's kind of simple here. If you can get above 235, that's interesting. You got 220 as a worst case stop. Um, what may be happening is with names like these, is whatever news came out causes a gap, but then you see that there's earnings tomorrow after the close. That may hold people back, right? We're only 300,000 shares traded today. That's not a lot. You can look at what the chart normally looks like, where it has just a couple trades a day. So there's not a lot of action going on here. Yes, it's a lot of relative volume, but no, it's not a lot of volume, period. So again, just be very, very careful with this name. I think what's happening here is that it gapped up and really nobody's trading it too much because they're waiting to see what happens on that earnings report. That's my idea. But if you're interested, right, 235, and then you've got 220. So you got a 15-cent range. And the reason you always want to think of where that stop loss goes, you just size yourself accordingly. If you're okay with risking $100 and you know your stop is 10 cents away, then you say, okay, I can take 1,000 shares of this. If your stop is, $1 away, you say, okay, I can take 100 shares of this. So just make sure you're sizing that accordingly. But that's PMD. Again, it's not really moving, not really doing too much here. Yeah, no problem. That's why I'm here. So 5-year, and we're going to UPST, the old Upstart. What does Upstart do again? Does anyone else remember that clip from CNBC? So Upstart, again, is something we got to go. We're going to do the longer term view right away. What stands out to me, this one thing I love about our charts, just right up in the middle, a 33% short float is wild. 1 in 3 shares are borrowed out there. So if this thing gets going, which we'll kind of zoom in and already has, if it continues to get going, there are a lot of people that are going to have to run for the exit. So that's good. If you want to buy it, that's obviously something you want on your side. They don't make money yet. They're kind of running low on cash and have a fair amount of debt. So from a long-term hold, you have to be careful with that. Uh, in this environment, in this market of 5% interest rates, making money and having money is absolutely king, right? Apple is going to be doing always phenomenally in this market because right, if they just sat back and took their $61 billion in cash and made a 5% on that money, the, they could make a lot of money from that. Obviously, they would never do that, but um, I mean, you just have to know that it's cash is absolutely king in this market. Now, looking at this long-term chart and going out to the monthly chart, this really kind of shows us the tail of this company. Like a lot of these IPOs that happened in 2020, 2021, an absolute ripper off the gate and then kind of completely fell apart. So out of favor. The thing I don't like about charts that have spikes like this is you generally speaking have a lot of bag holders. Think of the poor meme guys with, AMC, for example, right? This is a $5 share that there's some guy, sadly enough, holding at 600, someone holding at 400, 200, 300, 10, 20, all of the ways down. And what this creates is overhead supply. Putting yourself in the mindset of somebody holding something like this, you we've all been there. We all know what has the potential of happening when we're doing this thing. Um, it's very much a if you ever owned something like this and say you're in AMC at $80 and it's a $5 right now and you're always just saying in your head, if this thing ever gets me back to even, I'm out. Right? Over and over and over again. We've all said it, we've all done it. We all know we shouldn't, but we've all said it, we've all done it. And just think of the thousands to tens of thousands to hundreds of thousands of people in a name like this that are looking to sell. So it creates that overhead demand. So when I look at something like Upstart, I need to know that there are many, many people in this name creating this overhead demand. And they are going to be keeping this name with some type of lid on it. They're just, sadly, I do feel bad for them, but it is the way it's going to happen, right? They are going to have some sort of overhead demand when it comes to these things. Um, However, it's been basing for a long period of time. So if we want to go into stage analysis, there's essentially four stages of the market. You have some sort of uptrend, you have some sort of topping pattern, you have some sort of downtrend, and then you have some sort of bottoming pattern. An argument could certainly be made that since 2022, Upstart stopped going down, hasn't been going up, uh, just stopped going down. So that's kind of step one. This could be an accumulation phase. This could be where the market has found some fair value for this name. It wasn't $400 a share, but it might be $40 a share, right? That's where the market is looking at and saying that's probably fair value for the name. Now, zooming in to a more kind of shorter term chart, just having all of that in mind, we know that there's another big pop right here up to $60 that trapped a lot of people, and then another pop right here. So the fact that these pops are getting lower sequentially is a little bit worrisome, right? You have the trend broken, but each time this makes a high and it's making a lower high and it's making a lower high. So you want that pattern of lower highs to break. So for me, it means this zone right here is certainly something that I want to keep an eye on, this 47-ish dollars a share, because that would break this pattern of lower high after lower high after lower high. So now, again, zooming in a little bit, obviously a great reaction to earnings. And we had, this was the fifth, that the dreadful day of Japan breaking the market on the fifth, and then it had earnings the next day, and it gapped up on earnings. And I'm always interested in what the candle after earnings looks like. As a swing trader, I don't trade the day after earnings, but this candle being pretty solid green, and right gapped up, sold off a little bit in the morning. Buyers bought it up all day. That's good. I'm always just trying to put myself into the head of the environments, and the um it looks good, right? The people bought up earnings, so the nerds that actually focus on that stuff uh, are are loving life, right? So it's great. Now it's spent a couple days consolidating, and now it looks like it's trying to push up here with a little bit of a 10% push. So the obvious levels to look at are this prior high right here. If it can break through, my worry, or not my worry, my problem with trading a stock like this is, where do I put my stop loss? I don't see a logical place to put a stop loss for any sort of a pullback, which is unfortunate. For me, I like to see some sort of, like a base or something. This is an anchored view app, which shows us what the average market participant from right before the earnings, where they exist, and they're right here. So that could be an interesting place to put a pullback or put a stop loss. So you're getting in around 38 and your stop's around 32. So you say, okay, am I okay risking $6 a share? Do I think this thing will move higher? There's no pattern to play off of here because it's just been kind of grinding higher with higher lows ever since earnings. Um, but that's just the only way I could see to play it, right? Is you're taking a little breakout of this kind of $38 range right here. You have to find a place for your stop. Maybe use this prior high if it closes under here, or this anchored view app if it closes under there. It's time to get out. And what you're looking for is fairly quickly. You want to see this pattern of these lower highs change. You want to see some sort of buyer to come in that actually smashes you through this prior high and holds above it for a period of time. For me, on something like Upstart, that would be the trigger, because it may show you that the bag holders, that every time this thing rips, those bag holders are selling into that rip. That may be over. If we shoot up to $40 and then we start to kind of fail right away, then it just may be another one of these patterns, right? So always look at how the company or how the stock did in the past to give you some clue, right? There's people are more inclined to sell this thing on any sort of dip than they are to buy it on any sort of rip, right? If you were to take this chart and flip it, and every time the stock sold off, people were buying it back up immediately, and they were buying it at higher and higher prices, that would be bullish. The opposite of happening, where every time it spikes, people are selling it on lower and lower prices, right? So I hope that makes sense, but that's how I would look to play it. You're kind of playing this like a momentum play. It should go. It should within the next few weeks or so get over this prior resistance right here, and then you'd want to see a clear shot to there. And if it gets above there, will automatically um, you're loving life for sure. UPS. So we went from UPST to UPS. 1 second, guys. So UPS. So this is the kind of opposite. This is kind of the opposite of what we're seeing in UPST, where the long-term chart of UPS is very good, where we're up. It's a solid company. They make money. They have money. You're not gonna envision UPS disappearing anytime in the very near future. I mean, if we're in a world where UPS just goes away, I think we have larger problems to worry about. It's going to be one of those things that the kind of the whole market is probably in trouble if UPS is having a really bad time. So I think that's a solid thing. However, on this daily chart, it's just downtrend after downtrend after downtrend, right? It just can't get out of its way. Every time we have some sort of move, that move is selling off entirely, and we are pushing lower on any kind of a bounce, just down, 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 down. So this one's going to be immediately a bit of a no-go for me until we were to get back above this level, which was a solid breakdown level. So again, this yellow line, this indicates earnings. So on earnings, whatever they said, the market didn't like. It was running up into earnings. It sold off dramatically after earnings. and then it hasn't been able to get going at all since then. Tried to come up and fill the gap, failed entirely and pushed lower. So the way I look at it is that you've got this range right here, and until that range gets broken, this one is for me from the long side, a no-go, maybe to the short side. Now there's that old adage that all gaps have to fill, which of course isn't true. Of course, not all gold, not all gaps fill, right? It's just that, of course, that's not true. But if you're one of those people that believes that the majority of gaps fill, then maybe that's a shot you take here, right? That it's going to come back up and it's going to fill that gap, and that's already a good return on something like this. If you're looking for like a long-term kind of value investor type thing, I'm not the guy. Just I'll be blunt and honest with you for that. Um, I don't do any of that kind of value type analysis. I'm more of a statistical type of minded individual, um, and less of a hey, this company's undervalued or something like that. I will say, right, we are getting close to where we broke out of back in 2018, 2020. We had some prior resistance right there that may act as support if you're talking a really long-term trade, and I'm looking at a monthly chart right now, and you're okay with taking a shot and thinking that, we're gonna have some sort of bottom in this area. Go right ahead. It's not something that I'm interested in, but for the day chart, we are ob obviously and exceedingly in a downtrend. So gold. Let's use GLD for gold. We seem to be reversing here. Yeah, no problem at all. So with gold, uh, remains pretty clear. So if I go out, you'll see my drawings on gold. I've been a gold bull for a while, since kind of right in this area. And the reason for that is this long-term cup and handle pattern. And this is long-term. We're going back to 2012. So 12 years, this cup and handle pattern's taken to play out. So full disclosure, I have some gold. I bought some kind of on this breakout in this area, this kind of 290 or 190-ish. If I'm in something, I'll always tell you guys just to make that clear, and any bias that I can kind of come up with. Um, so right here, we have this amazing kind of push right in here with this long-term cup and handle. But from shorter term time frames, there's been breakouts and there's been consolidation and breakouts and consolidation. Uh, I think we could be in for just more of a consolidative phase here. Triple tops are very rare. Right? It's very rare that you can see three tops in a row, but can happen. So this could be what we're seeing right now. Again, very, very rare to see kind of three perfect points like you see here on a daily chart. That again can happen, doesn't usually happen. So I'd be a bit worried about that in the long run, right in this area. Yeah, because we got 1, 2, and we got 3 touches right there. And so now if we pull back, I think this 220 area would be interesting because that's where we broke out of the most recently is 220. So coming back to that area in 220, that could be an interesting push up here as well. So a lot of things to watch for, but right now we kind of just have to look at this as we're stuck within a range. We're in kind of the short-term range, which is also in this long-term range, and we are range bound. So we don't want to be making huge bets one way or the other when we're range bound like this. We want to look for uh, continuation out of this. Again, I'm long and I'm not planning on getting out because I showed you how long term of a trade this is. Doing things like covered calls and stuff like that to keep it interesting, for lack of a better term. But we are just stuck within this range. So for me to take any sort of add to or take my money out of, I need to see a resolution in this range. So if we come all the way back here and we break down a bit, That will be unfortunate because I'll be giving up a fair amount of profits, like 10, 15% of my profits. But that would be a clear sign for me to get out. If we just consolidate here for a number of days or weeks and then we break out, maybe I'll add to the position. But right now we're stuck. We seem hard stuck in this range. All right, so we have AMD. So with AMD, we have to look at SMH. So I talked about how I was a relative strength guy before. And what I mean by relative strength is I mean that I want to own the strongest stuff and I want to be out of the stuff that's not the strongest and maybe short it. And in past, and I'm sure in future presentations that I've given here, I've talked about why. Like there's a lot of statistics behind uh, that it makes sense to be in that standpoint, right? That makes um, there's a lot of advantages to being a relative strength trader. Uh, there's study after study after study just showing, hey, relative strength is the ticket. It's kind of the way to go. Um, by focusing on the strongest names, you're always in the strongest names, and again, it just makes everything a little bit easier in your life. So the reason I rant about that for an extended period of time is that we look at something like NVIDIA as a semiconductor name and focus on this kind of monthly chart here, and then we go over AMD. You can see the relative weakness that we've seen in AMD. AMD had been moving up because all semiconductors have been moving up, right? You want to talk about relative weakness, right? Intel is obviously the weakest name out there right now. So for when it comes to relative strength, I would favor an AMD or an NVIDIA over an AMD. Now, for what I see in AMD is that they reported earnings and they sold off dramatically after that. So whatever they said in earnings was not very nice to the overall market. Right? The market did not like whatever they were saying. Now, I'm just going to move this line because I think this will kind of show. If I was interested in AMD, I need to see it retake a couple clear levels. First one is this one right here, about 145, because that's the last place it bounced and it broke through that pretty substantially. So there's going to be a lot of people who bought this bounce or and are long kind of in this area, call it, this 145 to 150 area. There's going to be a lot of people that are having a bad time in that zone. So I want to see that zone retaken before I'm interested in AMD. A very logical thing that if you study markets, you see all the time is stocks rallying back to zones like this where it failed from initially. People using that as a moment, if it bounces up into this zone, people using that as a moment of, like we talked about before, oh, finally, right? I'm out. I bought it at 150-ish, hoping that this area would hold, and it didn't, and it broke through and went all the way to 123. Well, now we're back to 150, so I see my account value going from deep in the red to not so much in the red, maybe a little bit in the green or a little bit in the light red, that area, and then they start hitting the sell button. And people doing that collectively across a lot of people is what will cause this phenomenon to happen quite frequently, where you have a breakdown, you have a retest of that zone, and then a struggle. So for me, if I'm going to want to be bullish AMD, I'm going to want to see that level at 145 taken and retaken fairly quickly. And that changes the chart here as well, right? Where um, so say we kind of spike right up to 150 and then we pull back and we're kind of looking like this, right? We're holding this zone. What sellers, when they push the price down, buyers are coming back in to push it up. It shows that now the whole chart flips and this becomes, I've heard it called, right, a bear trap, scoop and save, a whatever it is. The This could flip the chart for me where now maybe the people who shorted as we broke under the zone, those people are now trapped and then forced to cover and we could push higher. But until we can retake this level right here, for me it's a sit on the sideline and wait. If you see it come up and hit that level and then fail, it could even potentially be a short. But I'm just not going to get involved with all of this overhead overhead resistance, right? I'm going to wait for one thing to occur. So in a perfect world, to trade this from the long side, I would want to see some sort of break of this level, come back, some sort of evidence that this is holding and starting to push higher, because then I can get involved there. I can put my stop right here, and I have a tiny risk reward to play off of. The issue is if you were to buy something like this right here, a logical stop would be all the way down here, and you're risking $20 a share. So you got to, okay, can I make $40 a share? Because the way I look at it is I always want it to be reasonable that I can get 2 times my risk in order to place a trade. I need that to be a reasonable, not guaranteed, obviously, because nothing's guaranteed, but that being something that is a reasonable occurrence. And in this case, $40 a share, well, that gets us right, all the way up here. And to me, that's a pretty kind of lofty goal to take a trade off of, right? I don't want to have to set up that as my potential to make 2 times my risk. The reason I eyeball and I think about 2 times my risk, because if that's achievable, then that means that if I think there's a better than 50-50 chance what I think is going to happen, then I should take the trade. And if I think it's less than 50-50, then I could still maybe argue to take the trade. But again, you want to make sure that risk reward is always in your favor, and just where you put the stop loss in this one is a bit of a thing. So I'm viewing AMD. Those folks, hard time zone, may have already expressed themselves in the initial pop, which knocked it down a second time. Now the market, of course, on course take the yeah, maybe. And again, what I would want to see is right this line right here gets broken and held above decisively. That's what I would want to see in order for AMD to push higher. I think there's Luis Yamada, who is a, let's do this, SMH, SMG, no, SMH. Luis Yamada, who is one of the OG technicians out there. She's kind of was a pioneer in the field, been looking at the market for like 50 years. One thing she always said, a famous saying of hers, was the bigger and the faster the drop, the longer the need for repair. Often when you have incredibly ugly pullbacks like this, we can actually quantify this if we take a look at our drawdown indicator. Drawdown like that. So yeah, we were down on SMH, which is a semiconductor ETF, over 25% of all-time highs. So that is a bit of a hit to a lot of people. And again, the bigger that drop, the longer I think that need for repair, right? And that was the old saying, which just means that, you know, do we think that even after this massive run we had in SMH, that we're going to have, a move up and then a push down and then an immediate spike higher? Anything can happen. I always want to preface that. I am no guru or no crystal ball, but it doesn't seem to me like that is going to be the move. That is, it's if we do push back up, it's probably going to be a long, slow battle, which doesn't mean you can't take the trade. It's just time frame, right? The funny thing is, my buddy JC has a quote that um, the most Twitter arguments about price could be settled if everybody just stayed at their time frame. So when I'm looking at these things, I'm more of in the couple weeks, maybe a month or two, maybe longer if it continues to go my way. That's kind of where I look at it. If you're looking at AMD and you're saying, I want to hold this thing for years, well, then maybe you could just set a limit and say, hey, if it gets above 150, I want to get involved. I want to put a stop at 125. And then, right, either it hits new all-time highs and continues, and AMD's an amazing thing, and you've got probably some sort of fundamental thesis to go on with that. Or it hits my stop loss and I take my hit and I go outside and swear a few times and move on with my life. That to me is a fine way to play it. I just think this level right here is very, very important. So that's kind of your trigger level to keep an eye on. So ESOA and back to the day trade. Let's go to a day trade. We've got all these. You can set up all of these layouts and do all kinds of crazy stuff with with trade ideas, right? So ES ESOA ESOA. So this one's interesting. It doesn't have that, insane 100 times normal volume, but does have 15 times normal volume. Makes it a good day trading candidate. Closer to 1 million shares traded today. Makes it a better day trading candidate. Look here on the daily chart. We're above kind of all the resistance we can see year to date. That's great. We could even just go to 1 year. And yeah, we're above any resistance we could see. That also is a good day trading candidate. These moving average ribbons that I talked about, the shorter term one is green, showing an uptrend, and we're above it, which is also showing an uptrend, which is great. And then the slower one is blue, and we're above that, showing that we're in an uptrend as well. So all trend indicators are pointing green on this one. The question just becomes, where and when to take trades. If you're a scalper, maybe this one right here, right in through here, you could say, hey, above $9, maybe that's an interesting trade. And then you could use this cloud as a trailing stop. If you have trade ideas, I can just show you real quick. You just go to your bar here, you hit new, and then you go to a new dock channel bar and just click on Ripsters, Rippers. Or if you have a little FX button right here on your chart, you can click on that. You can click EMA Cloud, and you can just add that indicator to your chart. It's just so you know the moving averages, or what this indicator is simply the difference between two moving averages. So this cloud, the top of the cloud is a 5-period moving average. The bottom of the cloud is a 12-period moving average. So think of it like a 10 EMA, but thick, right? So what it's saying is that in this area, the distance between those clouds are the one's on top of the other, and it's green, and then the distance between them is getting more green. So you could do this with traditional EMAs and you'd get the same data points, but this is just a good way to visualize it. And then down here, this is a 34 EMA and a 50 EMA. So it's a longer term moving average. And a gentleman who's an affiliate of ours called Ripster uses this as kind of his guiding light, where he'll do something like, just grab the SPY, he'll say, hey, if this thing is uptrending and the cloud is green, I'm going to stay long as I can. And you get the benefit of this move of having a consistent kind of trailing type uptrend. If we do something gold that we know reversed, he would look at this and say, okay, well, it's chopping up and down above and below the moving average. It's way less interesting to me using these. So then these scans are just showing you, because that's mainly what we do as a scanning service. With Starbucks, it broke down that moving average. So you can see how you could have been long and stayed long above this as long as up to here, and then it broke that moving average. So in this case, it may be something that someone may play as a counter trend trade if they're day trading and say, well, I'm going to short this thing, and then I'm going to use the upper end of the cloud as my trigger. Something like DJT, you can see is bouncing into this longer term moving average. So it may be, if you're looking to short something, this may be a good one to take a look to short, as if this moving average holds and we start to push lower, then you have this area of resistance. So potentially because it's orange, that the stock is downtrending on the 10-minute time frame, and it's bouncing into that downtrend, and it could be a short to take off that as well. So you can yeah, so just find it on Ripsters Rippers or the little FX button. If you don't see the FX button, just go to Trade Ideas and make sure you're on the latest beta that you can find on the website there. All right, moving along, because I think time may be coming for me. CVNA. CVNA, I love this one because of the insane move it had from nearly 0 to 150 and the short float that is continuously dwindling, which means that those shorts are being forced to cover. Still 14% of the float is short on this one. Every time it gaps up, they seem to try to fill the gap. They fail, which is great. It's a very bullish sign. Like I mentioned, there's the saying that all gaps fill. I don't see that. In this case, that gap didn't fill, and then it pushed higher. And we have this sideways consolidation. So I think a play on something like Carvana becomes very, very simple, right? You have a nice uptrend on the monthly chart. You know that there's a lot of shorts that were in this name that were caught completely offside. There was basically everyone was saying the stock was going to zero. And hey, look at them now. Certainly not a zero. Uh, Now, what you need to do is you just need to know that, hey, from 0 to 150, sorry, I'm just filling up my energy drink here. That's a heck of an uptrend, right? From 0 to 150. So it's moved a lot already. So you just have to note that. Um, that doesn't mean it can't move further, but it's a lot has been done. I think the trade here becomes fairly straightforward, where if we can get above these kind of prior highs right here and we can hold above those, makes sense to potentially be long. And if we break the low of this base, it's time to get out. I certainly would never lean short on a name that has the history of doing this. It's the same as why, as much smack as I'll talk about the meme stocks, I'll never short. You'll never see me short GameStop for more than a day trade. You'll never see me short AMC for more than a day trade, because they have this history of just making absolutely no sense and ripping. So you have to know that. I never be short this name. I just think that you just have to know that this has gone from 0 to 150. And again, the short float is starting to dwindle. So it means that some of those shorts have already got blown out. There may be more shorts that continue to get blown out with it. Um, but yeah, I like the look of this chart. Actually, this is one that I'm going to add to my list here. I'm going to do that now. I'm just going to add a little price alert here. I gotta close this thing just in case, just so I know. And this is mainly how I trade. I look at charts. If I see a chart like that I just put out a little price alert. If it gets there, the system will yell at me and say, "Hey, Mike, take a look at Canva. Got to the price you like." That's what I like the look of it. So, um, I don't like that we had a topping tail here, and I don't like that we had a bit of a topping tail here. So it's got to get through that zone very, very quickly. It's got to pop through that level. And whoever was selling here and whoever was selling here, you hope that guy is done. But you can't know for sure, obviously. So now it's just kind of a wait and see. Does this zone break? And if it breaks, do you get a hold above? If you do, then I think you have a move that you could potentially play on Carvana. But man, what a chart! Like, every time it pushed higher, you could almost feel that people were saying, "Oh, this is just a short covering rally," and they'd short back in. They get blown out. Oh, it's a short covering rally, short back in, so on and so forth. And just every time I've gotten blown out. It's a great lesson of why you want, if you're buying a company, why you love it if that company is heavily shorted and those shorts are wrong. Those two things have to happen. But you have guaranteed buyers, and you have guaranteed buyers that don't get to control their price, which again is phenomenal. All right. Am I 55 minutes? Am I 60 minutes? Do I have 3 minutes more or am I over? I never remember.
Uh, you can keep going for a couple more minutes.
Sure. So let's do one last one. Next one to get typed in. We'll do one more. Meanwhile, things that I am watching, just if you're interested, uh, on the SPY, this gap fill, right? What happens if we get up to this kind of 453? And then also we have the anchored VWAP from this high that we're battling right now. So today it's a very important day for me. So I saw DXCM here as this guy. Um, Again, if you're a gap filler, then this is something that's interesting. There are people out there who have this belief that the majority of gaps filled. I haven't really seen a study behind it. Maybe I'll do a study behind it. How about that? Maybe I'll go through the data myself to see if that's a thing. I just look at something like this and said something bad happened for a reason. I see that's a surgical or medical instrument company. Um, they reported something that spooked the market. I look at the monthly chart, I see that we're under some of these prior levels right like here and here at about 79 and 75 that we had problems with. If we can get back above this spike right here, that would get us above at least the 75 area and maybe the 79 area. I'm just grabbing this from the little picture chart we got here. Maybe you take a shot there and your stop goes right here. But it was in a downtrend before earnings and then gap down after earnings. I would, even though I'm not a fundamental guy at all, I would do a little bit of research of what they said that just really upset the market. Because again, when you see surgical medical device and you see a gap down like this, you worry it's a failed FDA trial